This video, I'm going to talk about the one economic indicator that's flashing red that historically has been the most reliable indicator for recession and what has happened recently that has sparked red flags for the economy. Welcome to Analyzing Finance with Nick. Based on your feedback, you guys want to hear more global macro commentary, and that's what today's video is going to be all about. We're going to be talking about the one economic indicator that has turned negative for the first time in years and historically has been the most reliable indicator, both on a coincidence and slightly leading for the future of markets and the economy. And that specific indicator I'm talking about is the ISM non-manufacturing PMI. Institutional Supply Management does surveys both for manufacturers and companies providing primarily services about their confidence for the future in a variety of indicators such as employment, about pricing power or how much price they have to pay, and just overall business activity. And historically, these have both been in line with the economy, but as the world has become more of a service economy and less of a manufacturing economy, and also the globalization of manufacturing supply chains, the manufacturing indicators have not been as important. In fact, you've had the ISM manufacturing in contraction for over a year from late 2022 to earlier this year, and the economy just did fine. However, the services is a much different story because the services economy in the US is over 70% of GDP. It's 77.6% to be exact. It's not as dependent on the global import-export market, and it's based on local demand. And since the ISM started tracking this data in the late 1990s, it's only crossed negative 6 times. And all of those 6 times have either been associated with a major recession or a bear market. As the chart that is popping up right now shows you, the historical ISM services PMI. The red box is the range below 50, and these are measured on a percentage of business owners' level of confidence. So 50 is effectively the 0 mark. Anything below 50 is sign of contraction. Anything above 50 is expansion. And so most of the time, services are expanding because the economy is expanding. And however, there are the times where it dips below the 50, which is the red box here. And they have all been correlated with major economic and financial market distress. These 6 instances where it first enters contraction were April 2001, March 2003, January 2008, March 2020, December 2022. And so what do these say about the economy? These are all times when this happened where there's a recession or a major bear market. The 2 times there wasn't a recession was 2003, which was towards the tail end of a 4-year bear market in the S&P and NASDAQ. And then also in December of 2022, which was near the end of the 2022 bear market, which outside of the AI-related stocks extended well into 2023. And also, that one surprisingly came after what was likely a recession in the first half of 2022. So that's kind of the one anomaly here. And now this is the 6th time. And based on what's happened in the previous 5 times, either it was either in the middle of a bear market that's happening already, or the point where a recession became obvious to the general public, it means that this is really a time to be cautious in terms of the market and economic outlook. And this and all the major coincidental economic indicators, I personally find to be the most reliable from the perspective of a macro analyst and an investor. If you have any questions about the ISM Services PMI, or you think I'm wrong and something going on, such as boomers drawing from retirement or increased government spending, will be able to keep the economy afloat despite a weak services PMI, I would like to hear your comments. So feel free to like, subscribe, and increase the discussion here. And thank you for watching, and I will bring more of this type of commentary in the future.